Okay, good time then to bring in our next market guest to get some perspective on what's going on. Vinay Jaising, Chief Investment Officer and Head of Equity Advisory at ASK Private Wealth, is with us on this leg of the show. Vinay, great to have you join us here on Moneycontrol. Good to have you back on this program. And since I think we last spoke, things have changed for the better. The war finally seems to be over. How are you feeling about the market now?
Very good. Having said that, remember, if you'd asked me how you're feeling about the global markets have already roared long before the ink is dried of the war getting over. You have the global markets move between 10 and 30%, depending on the market you're talking about. The Max 7 space is up 30%. Most of the markets are up 10%. Indian small cap is up 10%. And this is from the time the war started, Feb 27th, Feb 28th. It's only the Indian large cap which have not yet rallied. There are a couple of checks for the market. In the short term, what's the fine print you'll see in the next 2, 3 days, when they're inking, the deal of the war. What happens in the next 60 days? So that's one part of the war. Do we see oil, which is, good news for India at 78, just about 7, 8% above the levels of what they were pre-war. So you would see the import bill for the country again easing out. So all the risks we had as far as India is concerned on the dollar, the risk relative to where FIs are getting out because currency is moving against them. The rupee is getting weaker. Those risks are being addressed as we talk. Now, I think all eyes would be in the next quarter on the earnings season. There will be pain because of 2.5 months gone for a couple of companies who've had a supply chain issue. But apart from that, we're looking at a very robust, I would say, space for mid and small caps, especially where the earnings growth is being driven from both domestically and the rest of the world. Where they are capex providers. So that's how we're feeling. Very good. Thank God the war's behind you. Currency now should get a bit firmer, the rupee, and you should start seeing FIs coming in sooner than later.
Are you seeing any chatter, any even whispers of that, Vinay, as of now? I mean, we've just seen 1 or 2 days where the FPI number, the net number, at least is not a sell. I mean, it's 100 crores buy, and we take that with both hands these days.
You've said it so well, right? Hope is a better word. What you've seen, I haven't seen at one point of time, apart from in taper tantrums, when the government did so much for trying to control the currency. You've seen, the FCNRB, which the banks have been allowed to get bonds on. That itself, once it starts, you've already started seeing of some of the banks offer that to NRIs. That's a big number which can come in. So once you start seeing inflows coming in from there, that would be a big positive. You've already seen, I think, $1.5 to $2 billion come in for G6 by FIs. But that's in the debt market because the withholding tax there has moved away. So also the capital gain tax. The next move you'll see a little slower is when Bloomberg looks at India and the comment they made in January for the debt market for India inclusion was removal of the withholding taxes for the G6. Now that's gone, so that's another upside which will play out in the next 3 to 6 months. You've seen even RBI and the government talk about two more things, which is swaps being 1.5%, both for PSUs as well as for the banking sector. So all these, it will take a little bit of time, but now my bet is as you see the currency move, it's shaved off 1 rupee, but if you see the currency move from 95-ish to 94-ish to 93-ish, that's a time where you'll see real, FIs at least get in money. Having said that, remember, whatever was haunting India earlier in terms of earnings growth or in terms of India not being an AI story, those two still remain, right? These two issues are not going to be resolved. India is more a non-AI play. You'll have one-offs, which is why what we're doing at ASK Wealth is, we are looking at these one-offs and looking at those picks we want where you are having, particular stories which are linked to the rest of the world and the AI capex is being captured out there. So you've got to be selective. You cannot generically make a statement out here today.
No, absolutely take that point, and I'm glad you brought this up because once the euphoria and the, exuberance has died down of finally the war ending and the, price of oil stabilizing, we come back to the earlier malaise. And that is the fact that we were growing at single digits, demanding valuations at, 20 times plus, while the rest of the world was running on this AI trade. So rewind back all the way back to, say February before the war started. Now, compared to that, Vinay, what has changed? And just elaborate on the point that you made of how you are, shaping portfolios to deal with this reality.
So, post-Feb, the results of the quarters have come out and two data points have hit us. First, if you look at just the Magnificent Seven results, most of them have been fantastic. If you look at companies like Nvidia, if you look at the way they've shaped up their earnings growth, the bottom line growing at 200+%, top line growing year on year at 85%, it's telling you that's for real. The capex guidance, if you look at what's happening in US, purely in the AI trade, is moving up from $700 billion to 950 to $1 trillion. So that's a reality. What we are trying to focus on is what part of that can come to India. Obviously, 75-80% of that is going to remain with the hyperscalers where India does not have much of a edge. But when it comes to the capex providers, be it for the generators, be it for the airfoils, that space, or be it for the DG sets, power equipment, that space where you're seeing orders already come in, or hot boxes, that space of it, we are looking very excited. We're already in it earlier for some of them, but that's a space we are learning a lot more. These are earning dollars as well. So, compared to Feb, you're already at 94, 95. The order book for these companies are going up. If you had looked at the quarter results, that's the second point of the companies which came out. Consumption in India, even if you look at the loan book growth, has been very robust at 15.5, 16%. So going back to the quarter results, a lot of the companies may not be in large cap, but mid and small, started growing between 15 and 25% year on year. That may be questioned this quarter because energy prices were certainly up for most of them. But that, beside being the point, if we are seeing the order book momentum grow, that's where I think is the second, as I said, the second comment, when you start seeing the results come out, and you are about a month and a half away from the results season trickling in. But once that comes out, your eyes would be all on, yes, the war's over. What are you seeing in the month of June? Maybe only 15 days. How good is it being? I think consumption may not slow down, but you will start seeing very strong capex because of the AI trade in the world, and because interest rates now have been, they've become benign, right? You wanted to raise interest rates when inflation was going to inch up substantially. Now you will raise interest rates a little bit, maybe in the rest of the world, to control inflation, but it's gone into more or less a benign environment. That's very good for capex. So all our eyes really is in the space of capex.
Okay. So, Vinay, to talk about this, you mentioned that you're looking at AI plays here in India, but are you getting enough options? I'm guessing it's a very small, narrow universe. You mentioned some of the companies making equipment. I mean, all these data centers will need power. So I'm guessing you are referring to power and that whole ecosystem. But what else? I mean, what else is the AI play in the listed Indian equity market?
You have data centers, you have power companies, which are tying up with the global players. You have companies which are giving raw material to the power, so the generators, the turbines, the blades, precision equipment engineering companies. You have cooling systems coming into the play. Then you have some, AI application companies coming into the picture. I won't call real estate a direct play out here, but then that's a space also you cannot avoid, where you've got direct tie-ups with the global bigwigs. So it is an interesting space. If you look at the capex purely in India announced by let's say the three big players globally, they're investing about $65 billion in India with players like Bharti and Reliance and Adani. So you are seeing a capex rush of global AI coming into the country, and the universe is not small. That's what I can tell you. It's ever growing because everyone is seeing an opportunity. There are companies we are looking at having 70 to 80% of the incremental order book being driven just by US, because AI is today not being measured in megahertz; it's being measured in megawatts, gigawatts. You need that power. To get that power up, you need a lot of equipment, you need a lot of capex, and that's the space I think where we can make a difference.
Okay, so basically dovetailing on the global AI capex wave, which continues to be very, very strong, at least as of now. Got that point. What else, Vinay? Anything else exciting you in the market right now? I mean, IT, I'm sure valuations are great, but I don't know if you're still biting in. Beyond capex, what else
Uh,
are you thinking about?
So, in the finance space, because interest rates are benign and because of what the government has done, liquidity is going to increase substantially. We did speak about global capex, but domestic capex will also do well when liquidity in the country goes up. Remember, if you look at numbers, analysts are talking about $100 billion of inflows because of all the measures we spoke about as far as debt is concerned. That will make a big difference to liquidity in the country, and that will keep interest rates a lot lower. So it's not just global capex for AI. We're also looking at domestic capex plays. Earlier, we were only depending on India to increase the Indian government to increase the capex for the country. But now you may start seeing a lot of green shoots come in from the bigger players as well. Be it pipe companies getting good orders, or building material companies. So we're focused on that space as well. NBFCs are taking advantage of the fact that, interest rates are low and consumption has slowed down. So that's a space we are looking at pretty impressively as well. Uh, the entire banking space we are not looking at as constructively just because the index weightage is very, very high out there, though valuations there are interesting for the private banks. We prefer the NBFCs a little bit more just because they've got the momentum for consumption growth coming in. IT, don't want to get into a big fight between big players wherein you're at one end, your revenues are reducing because of AI. At the other end, you are going to sell those tokens or those services which will match the revenue loss. The valuations are very compelling, but we are underweight that space. Apart from those IT names which are totally AI driven, again, if you look at some fiber optic company names, which kind of come into the IT sector, those spaces we are looking at pretty impressively. So there's a whole list: pharmaceuticals, those CDMOs which are selling to the rest of the world, having very good, supply chain which has not been disrupted. That's a space we are looking at as well. And domestic pharmaceutical market also looks very impressive.
Okay, all right, got it. And on financials, if I got you correctly, you prefer NBFCs right now over private banks, right?
That is right. Just because the liquidity is coming into the country. That's one. Second, you're seeing a lot of consumption growth, which hasn't slowed down at least to the last month's data which we had. You add the two, NBFC's growth, whatever companies we are seeing is between 18 and 23, 24%. That's pretty impressive, and that's going down straight to the bottom line, if not, better. So we're pretty impressed with those kind of numbers.
Okay. All right, that's a very comprehensive deep dive into how you're looking at the portfolio and where you're looking to deploy money, Vinay. Now zooming back out to the larger picture, and the problem with this market is that in pockets, if you've picked the right stock, I mean it's been a good market, but at a broader level, it's been an underperforming market, right? Do you see that changing in the coming months?
I don't think so. The reason I'm saying this is, when you mentioned earlier, if I look at just Bloomberg estimates of P's of India versus the rest of the world, we are a little cheaper probably compared to the rest of the world as far as MSCI is concerned. Or compared to our absolute past. But because if you look at an emerging market, you've got countries like Taiwan, countries like Korea, wherein the growth rate, because they are dominated by one or two stocks, if you look at Taiwan, TSMC, if you look at Korea, you've got Samsung, Hynix. The weightage of those names are so much for their weightage, for their portfolio, 50 to 60%, and the earnings growth, let's say for Korea, is 100% plus based on the Bloomberg index. They're trading at pegs of zero point 0.3 to zero point 0.6 times. As against Indian earnings, if you're good, at least for the large cap would be 15%. So if you're coming to India, you will be selective. You want the high earnings growth story. So to take a very constructive call on the index is getting difficult, which is why your comment on FIs earlier is very important. Today, DIIs are driving the market. When FIs stop selling the market, you will see a respite in the market and that could grow. That's constructive, but to expect a strong index growth, it has to come with strong earnings growth. And that, I think, this quarter may not tell us, next quarter may tell us that answer.
So I think we have to wait a little while longer to see if global trends change. As of now, this AI story is going very, very strong. So maybe not a very compelling reason to buy India at an index level. But I mean, the silver lining is, as you're saying, there are a lot of individual pockets and opportunities, but one has to look very, very carefully. Got it, Vinay. Great conversation. Plenty of perspective there. Thank you so much for being with us this morning on Moneycontrol, and we hope to see you more often in the coming weeks and months.
Appreciate it. Thank you.
Thank you. Have a good day. All right, that's a view from ASK Private Wealth. So more measured, slightly more sobering, and Vinay pointing out the obvious that we still have issues. There's still a large AI wave across global equities, which has not ended.